If you are still jumping from one forex strategy to another, this video might be the reason you will eventually become profitable. And funny enough, towards the end of this video, I will be revealing a whole lot, trust me, a whole lot to you. All right, this is ageless. Now, most traders are addicted to what? To strategies. New strategy today, new indicators tomorrow, but their account balance remains the same. So I want you to pay attention to this. The market does not respect your strategy. Trust me about that. The market does not respect your strategy. It respects price balance and imbalance. And these are the things that I'm going to be explaining to you now. And I will be taking you to the chart. And when we get to the chart, you get to see a whole lot that you were not opportune to know. So right now I'm going to be explaining what is called what? Balance price range. Please, I want you to pay and maximum attention. Balance price range. Balance price range simply shows you where price is likely to react, or probably where it's likely to rebalance, or probably where price is likely to what? To continue. So that is why you really need to understand the language of the market, the language of price, because profitable traders don't know more strategies. They don't actually put strategies as in the forefront of their trading journey. What they do is that they make sure, or probably they ensure that they understand price delivery. That is what they understand, the language of price, the language of the market. So now I want you to work with me. Now by the end of this video, trust me, you are going to learn a whole lot. Now let's go into this chart. Now as you can see, this is DSY weekly time frame. This is DSY weekly time frame. I've checked the monthly time frame. There is nothing happening there. Now this is weekly time frame. This is where the price is at the moment. As you can see, price delivery, it is bearish. Okay, it has been bearish for a long time. Now when price eventually got to this point, we don't know where price is heading next. So, and over time I've been explaining to you that you use fair value gap as a leg, okay, because fair value gap tells you where price is heading. Now as it is now, where we are now, we have a fair value gap. You might not see it, but let me just point it out. Now look at it. Can you see that there is a fair value gap here, right? There is a fair value gap that has been formed within this particular region, right? Now, and it is not just any fair value gap, it is what? A bearish fair value gap, which simply means that what? We should be trading bearish, okay? Price should continue to trade what? Lower. So how do we trade this now? Now we expect price to come into the fair value gap, because fair value gap is a magnet, and when price comes into this fair value gap, it will pushes it will push what? The price away, such that price will now continue to what? To go lower. So that is what? That is the function of a fair value gap. Now let's see what eventually happened. Now can you see price has actually entered into this fair value gap. So now our expectation now is that what? This fair value gap should push price away, such that price will continue to what? Trade lower. But eventually price ended up creating a bullish fair value gap instead of a bearish fair value gap to continue lower. So it created what? A bullish fair value gap. Now the region where this bullish fair value gap and the bearish fair value gap, where they what? Where they collide, or probably, how do we put it? We can see where they merge, or where there is a balance. It is called what? Balance price range. I want to show it to you now. Just look at it. Now look at it. This is a bearish fair value gap that we anticipated that it will continue to push price lower. Now eventually the market now created a bullish fair value gap. Now bearish fair value gap and bullish fair value gap. This region where they overlap is called balance price range, and that region is so strong that it can what? It reject price. Now let's map out the balance price range. Now look at this red rectangular bars. Can you see that region is called balance price range? Now, for the fact now that we now know the direction of this market to be bullish, because it has created what, a bullish fair value gap. So which simply means that we should be trading what, bullish, we should be buying. So we expect price to retrace back into this balance price region, which is this fair value gap region. Then the moment price touches or comes into this region, it will push price away because it has what, a strong force. That this is a strong zone of price, strong zone of the market. So the moment price comes into it, it has the tendency to what, to push price away, and price will continue to what, to trade far, right? Now let's take a look at it. Now, this is our anticipation. We anticipated that what, price will come into it, then it will push price away, and price will continue to what, to be bullish. Now, look at what eventually happened. Now, price has actually entered into this region. You understand? So this balance price region, right? So we expect price what, to now what, to now go up. So now the moment price comes into this region, that is when you should go to the lower time frame for your entry. Can you see this is weekly time frame, right? For the fact that this is weekly time frame, you go to either 4 hour or 1 hour for your entry, for your entry confirmation. Now let's move on to what, to 4 hour time frame. This is 4 hour time frame now, right? Now look at that weekly fair value gap. This is the weekly fair value gap, weekly bullish fair value gap, and this is when price was coming into it. Let's go back so that you can properly understand it, right? Now look at it. Look at the weekly fair value gap region. This black weekly candle that pushed into it on a full body, right? Now this is the candle, right? Now if you go to 4 hour, that weekly candle, this is it. So when it was coming into the weekly fair value gap, now we are waiting for what, we are waiting to see that what, this weekly bullish fair value gap will create what, a new bullish leg on this 4 hour time frame. That is where we can now confirm that price is ready to move, then we can now enter. Okay, now let's take a look at it. Now look at it now. Price came in into the fair value gap, weekly fair value gap. Now price is going out. Now as price is going out of this fair value gap, it is expected that price should what, create a fair value gap. It has not created a fair value gap. You wait to see a fair value gap, because fair value gap is a leg. The moment fair value gap is created, then that tells you that price is ready to move, because it is a leg that price will use to move to the next level. Okay, now this is a bullish weekly fair value gap. So it is expected that it creates what, another bullish fair value gap on the lower time frame, which is this what, 4 hour time frame. So you wait patiently. That is one thing about what, forex trading. You have to be what, you have to be disciplined, and you have to exercise patience enough to see that okay, you are fully confirmed that you are it is time for you to take your trade. Now let's take a look at this. Now it has created what, it has created a bullish fair value gap. If you can't see it, let's map it out. Can you see the bullish leg? Can you see? So this weekly fair value gap has created what, this bullish 4 hour leg. Now this is where you should be entering this trade. Now when you, can you see? Now we expect that what, price will come into this fair value gap, then this fair value gap will push price away. So you place your entry. Now can you see? Now you place your entry here. All right, sorry. So this is where you place your entry. Can you see that? Your entry. Then your stop loss will be at this swing low. Okay. Then you place your 1:2. So there's no point. There's no way that price will now come down to take you out. No, because price is ready to move. That is why it created what, this bullish fair value gap. You might be wondering that, or you might be thinking that, okay, what about the news? The news will do its things, but the news will not push price lower. Okay, if there is news release, what news will do is that news can actually go a lower a bit, then price will continue, because news cannot change the direction of the market, because the market is analyzed to what, to go bullish. Okay, so news is just a distraction. Okay, so when news is being released, it is not sufficient enough that news will push lower to take you out. No, so news will do its things, then price will still continue in its direction. Now, can you see, after you have placed your buy limit and you place your stop loss and your take profit, then you just walk away. So then you come back to see to your what, to your profit. Can you see that? So when you walked away, price eventually came into the fair value gap, tapped you in, and moved in the direction. And when it moved in the direction, it hits your what? Your TP. After hitting your TP, it even continued higher. That is because what? That's because of the effect of the balance price range. Okay, balance price range is so strong that it pushes price far. All right, so now that is just that about that. Now let's take a look at another chart. This is going to be GBP USD on a daily time frame. Can you see, this is GBP USD? So now on a daily time frame, we have what? Fair value gap. You must have gone to what, to the monthly time frame first. Okay, when you check the monthly time frame, if there's no fair value gap, you switch to weekly time frame. If there's no fair value gap on the weekly time frame, you go to daily until you are able to see a fair value gap. Now that there is a fair value gap here, so we anticipate that what, price is going to what, go bullish, because this is a bullish fair value gap. Let's mark it out. So we mark it out. When you mark it out, you see it. Can you see it? This is a what, a bullish fair value gap. So we expect price to come into this bullish fair value gap, then it will now reject price upward. Now let's take a look at it. So this is our anticipation. So we are anticipating that price will come in, then it will push price upward. But eventually, look at what price did. Price came into the fair value gap. Yes, we are still anticipating. Now look at what eventually happened. Now, instead of this bullish fair value gap to push price up to continue in an upward trend, but what eventually happened was that what, it now created an opposing fair value gap, a bearish fair value gap. A bullish fair value gap could not sustain its movement. It now created a bearish fair value gap. So now we now know the direction of the market. The direction of the market now is going to be what? Bearish. So we be trading bearish. So we expect price to push into this fair value gap, then it will now push price lower. Now, the region where this bearish fair value gap overlap with this bullish fair value gap is called balance price range, and it is a strong region. It rejects price. When price gets to that region, it rejects price. So that is, now let's take a look at it. Now, can you see it? So the yellow line shows what, the bullish fair value gap, while the blue line shows the bearish fair value gap. So this region where there's an overlapping, if you map it out from here, where the overlap is called balance price range. So it is expected that when price comes to that region, it will push price away with full force. Now let's take a look at, now look at that region. Now it has been mapped out. So that region is called balance price range. So when you go to your chart, when you see all of these things, especially this balance price range, so don't hesitate to take a trade, and trust me, it is highly profitable. So these are some of the things that I've taught my students in the mentorship, especially some of my students that are here now. Many of them are here. They've learned all of these things, and they've learned a whole lot as far as balance price range is concerned. So I believe that this thing is not new to them. Now let's take a look at it. Now we expect that price will push into this fair value gap, which is this balance price range region, then it will push price away. Now let's take a look. Now look at this. This is our anticipation. Now what eventually happened? Can you see? Price came into that zone, and it seems as if it's going what? Is going bullish. But you that you understand the language of the market, that this region is a balanced price range region, you have to wait. So newbies, you understand, new traders, inexperienced traders, they would have placed their what? Their buy, okay? They would have placed their buy, hoping that price will continue upward. But you as an experienced trader, especially most of the traders who have gone through my mentorship, they know what to do. They will wait because this region is expected to reject price. Okay. Oh, can you imagine? Wow. Can you see? This candle came in on a full body. Now, when it got to that region, it's being rejected. Can you see? So that is that. Now, let's take a look at what eventually happened on the lower time frame. Now, before we go do that, let me explain your entry. You understand? This is daily. Can you see? This is daily, and this is daily fair value gap. So after price, the moment price comes into this region, what you have to do is that you go to the lower time frame. Either you go to 1 hour or 15 minutes for your what? For your bearish entry. So now we switch to 15 minutes. Now, when you switch to 15 minutes, look at when that price was coming into this region, into this daily fair value gap region. Okay, because this is 15-minute time frame. Now we want to enter. Can you see price came in? All right. Now we expect to see that there is a bearish fair value gap before we take our entry. You have to be patient enough. You understand? Now, can you see? Eventually, there is a 15-minute bearish fair value gap that was created. Now, after the creation of this 15-minute bearish fair value gap, now this is where you should enter. You wait for price to come in, then it will definitely reject price because now that this bearish leg has been created, it shows that price is ready to move, is ready to advance lower. Okay, now because this is a leg, okay, now you place your stop loss. This is our anticipation. We anticipated price comes in, it pushes price away, then you place your stop loss. Now, sorry, you place your entry. Now look at it. You place your entry somewhere around there. Can you see that? Then your stop loss at this swing. There's no way that price is going to what? Is going to go up to hit you out because this fair value gap is a daily bearish daily fair value gap that now created another bearish leg on a 15-minute time frame. So price is about to what? To expand lower. Even though there is news release, it's not coming up to take you out because news has been priced into this. Price wants to move lower. Okay, so now you place your what? Your sell limit, then your stop loss, your take profit 1:2, which is more than enough. Then you walk away. You walk away. Then what price will just eventually come in, tap you in. Can you see? Price will come in, tap you in, then it will go lower. Now, as price was coming lower, there was a news release. So news pushed price up to sweep this high. Can you see? It never went above this. It never went above this. So it only tapped in, then price continued in its direction because price is expected to what? To go lower. Okay, now that is that about that. Now let's take a look at another one before I explain some certain things to you. This is gold. You understand? The almighty gold. Now this is gold on a monthly time frame. Now when you look at this on a monthly time frame, can you see monthly time frame? Now this is the price action. This price is in no man's land because there's nothing happening here. Can you see that? We don't even know the direction of price. There's no fair value gap. There's no leg to tell us that price wants to move either up or down. Okay, can you see it now? Look at it. We don't even know the direction of price. We don't know the bias. All right. So if it's going up, we don't know. If it's coming down, we don't know. Then you now switch to a weekly time frame. You understand? When you switch to a weekly time frame and lo and behold, there is a weekly fair value gap. So this tells us where price should suppose to be heading. Okay, this weekly bearish fair value gap. So let's map it out. When you map it out, you see that this is a bearish fair value gap. We expect price to what? Continue lower because it's a bearish leg. okay, it is expected to create more what? Bearish fair value gap for a bearish trend to what? To be sustained. Okay, now look at what eventually happened. Now we expect it to come in, then it pushes price away. But now look at what eventually happened. Can you see? So price came in into the bearish fair value gap, right? Now you as a trader, an experienced trader, you have to wait because you wouldn't know if this fair value gap is going to still push price lower. But eventually, instead of this bearish fair value gap to push price lower, now a bullish fair value gap was created. Now the region where this bullish fair value gap overlap with the bearish fair value gap is called balanced price range. That is a strong region in the market. Okay, can you see? This is a bearish fair value gap. This is a bullish fair value gap because now we know the what? The direction of the market. The direction of the market is bullish because it eventually created with bullish fair value gap. So we should be trading what? Bullish. Now can you see? Balanced price range. Don't forget this region is so strong that it can push price as far as it can. Now let's look at it. So we are expecting that price will come in. When price comes into this balanced price range, it will now push price away with force. Now look at it. This is our expectation. Now in the process of when this balanced price range was created, now it now created another bullish fair value gap. Now when this fair value gap here, bullish fair value gap was created, it created what? An expansion candle which eventually formed a breakaway gap. So some of my students, they they understand this concept. Okay, this is a breakaway gap. When there's a breakaway gap, price is not expected to come back into that fair value gap anytime soon. And funny enough, it now created as after this creation of this fair value gap within this balanced price range region, e now created another price leg, another fair value gap again because this is weekly time frame. And you see that this is weekly time frame. E now created another bullish fair value gap. Okay, so price is not coming to this word balanced price range, but notwithstanding, the effect of this balanced price range is what will now what push price upward because this is a force, it is a strong force, and this is even the reason why there is a creation of what? Of another bullish fair value gap. So price will go towards this fair value gap that is formed, then it will now push up. Now let's take a look at it. Now look at it. This is it because this is a breakaway gap. So price will now use the nearest fair value gap. And this fair value gap is overlapping with this swing point. This is overlapping area. I have taught you overlapping defense. So you go back to the ICT videos on my YouTube, then you will see it. So this overlapping area is another strong defense zone that is ready to push price up. But notwithstanding, this the reason why there is going to be a strong movement is because of the creation of this balanced price range. You need to understand what the market is telling you. Okay, so now price has come into this fair value gap. The moment price comes into this fair value gap, that is when you should go lower to the lower time frame for your entry. If it is weekly, you go to 4 hour or 1 hour time frame for your entry. Now as price has come into this lower, let's see what is going to happen. Can you imagine? Now price is about to what? Expand. Price came in on a full body, you understand? Then there is now what? This next candle now sweep below. You might be wondering that, okay, how come this there is a full body, full bearish candle entering this um fair value gap zone? And the reason is that when this candle was coming in, this is the weekly time frame. So this when this candle was coming in, maybe probably at that time it was on a Friday. Okay, so market was about to close. So there was no enough time for this fair value gap to push price away before market eventually close on that day. Okay, then the next week what will happen is that the new candle will have to sweep the low of this previous candle to then continue upward. Okay, to then expand upward. I've taught you two candle rejection. Just go and check this YouTube channel, you will see it. Okay, so that is the concept. Now let's continue. Now look at this now. So by the time we now switch to 4 hour time frame for our entry, because that was a weekly time frame. Look at the weekly fair value gap here. Look at when price was coming in. Okay, so we now that we switch to 4 hour, you will wait to see that this weekly fair value gap creates a new what fair value gap out. Okay, so let's take a look at it. Can you see a new 4 hour fair value gap leg has been created, which shows that price is ready to move, is about to move now. So now this is where you are going to be entering from. All right, so you expect that price is going to what is going to tap you in. So you place your what your entry here, your buy limit. Place your buy limit here. Then this is the swing low. Can you see this long weak candle? You place your stop loss here. Then you target 1:2. You target 1:2 because this region is what a balanced price range region. So price is ready to what expand, is ready to push price higher. Let's see if it eventually went. Can you imagine? So price eventually went and hit our what take profit, and not just only that, it kept on what going because of the effect of the what balance price range. So when you go through your chart and you see a balanced price range, don't hesitate to what to jump into the market. Now look at that trade that we took on that 4 hour, because we switched back to weekly time frame now. Look at the trade that we took on 4 hour. Look at that balance price range. Look at where we entered. Price came in, tap us in, and push price up. This is the take profit. Can you see? Let's go back again. Let's go back to that 4 hour time frame. Now look at it here. Can you see? So this is where we entered. This is our take profit, and this is our stop loss. Now this is it on a weekly time frame again. Can you see? We only took a fraction of the move. Okay, now because of the reason why there is this strong move is because of this balanced price range. Okay, can you see it? After you've made your money and you're out of the market, then you wait for another price leg to be formed. And you see there's a fair value gap here too. So you place your entry here, your stop loss, then you allow price to do its things. So as price is going, it created another fair value gap here. You enter here again, your stop loss here, you allow price to continue, and it will continue to move. So all right, that is balanced price range. Go into your chart, look at it, and you will see some of these things that I've taught you. Watch this video over and over again. And if you've not subscribed to this channel, I want you to do it right now. And I also want you to like it. Then you can also drop a comment. Let me know in the comment section if balance price range finally click for you. All right.